Our week 2 material is going to be divided into 2 different sections. This first section, we're going to cover who's an employee and who's an independent contractor. We're going to look at what FLSA means and who is covered by the Fair Labor Standards Act, and who is allowed to get overtime pay. We're going to cover all of that kind of stuff in this first lecture. And our second lecture, we're going to delve more into the FICA taxes, and we're going to look at what's taxable for Social Security and Medicare and how to calculate our taxes once we hit certain caps. So that's going to be in our second part of this week's lecture. All right, so to jump in, the first thing that anybody working in accounting, and especially payroll, you should definitely understand what's the difference between an employee and an independent contractor. Lots of people are misclassified, and the employer can be held responsible for any back taxes not paid. So it is important that the status is done correctly, because taxes are paid differently depending on what you are, if you're an employee or an independent contractor. The general rule here is the common law rule, and that's something you're going to hear a lot if you ever deal with any type of law, is you're an employee if the employer can control what will be done and how it will be done. Not necessarily that they will control it, but that they have that option. They can do it. We're gonna look at a couple of examples here in a second, but just wanted to point out that a few positions in the corporation type world that are employees that you may think, well, I'm not real sure because they're so high up. But yeah, CEOs and any vice presidents or presidents, they are considered employees of the company. All right, so who's an independent contractor? Generally, an independent contractor, you as the payer only control what the result will be. You tell them what you want, and then it's up to them. They control the means and how it's going to be done to get to the result that you want. If that's the case, then it is a independent contractor status, and it's not your employee. So courts, whenever there's a decision to be made, courts will a lot of times look at a lot of different factors, and I've put several of these down here. Not any one of them overrides another. There isn't one that's more important than the other, but generally the courts will look at the majority. If they answered yes or no to, they may have 10 criteria that the court is going to focus on. Every court's a little different. But they're going to look at that and determine if you are an independent contractor. So if they say that you, as the worker doing the work, also hire and pay your assistants on your own, and that's definitely a criteria for an independent contractor. Doesn't mean that you definitely are, but that's going to go in that direction. You determine how the work is done. You set your own hours. You work for lots of different people. And then one of the key ones, there's a couple key ones here. You're paid by the job. That's a big one. You're not paid by the hour, so you just get paid whenever the job is done. And another really big one is you have a potential for a loss for your job. You could be working, get paid $100, but it actually cost you $120 in materials. So you actually didn't make any money at all. You worked for free and you lost money. That would be a big thing for independent contractor status. And also, if you furnish your own tools, a lot of employers will furnish the tools that you need to use. Independent contractors supply their own. One thing that is the case for independent contractors are your licensed real estate agents. So when we start talking about pay, they don't have taxes taken out. They have to pay their own taxes. So any of you real estate agents out there, you would already know this. And it's just something that's how it's been determined. Even though you may work for RE/MAX, you are still considered an independent contractor because you pay RE/MAX to use their facilities, to use their name. You pay a monthly fee. Okay, the Fair Labor Standard Act. This is a big criteria for a lot of rules that we'll see going forward. If you meet this plus usually something else, and there's lots of different something else's out there, but if you have to usually meet this one rule to be covered under lots of things like the American Disability Act or the Equal Pay and Equal Rights, all those different work-related laws that are out there. Usually the first one that the standard you have to meet is you have to be covered under FLSA. And almost all employers are, and you'll see why. The first thing that you're under FLSA or the Fair Labor Standard Act is if you have at least 2 people in the company who work in interstate commerce. You think, well, what's interstate commerce? Well, anything that deals with you working with materials or customers from out of state, that is considered interstate commerce. And there are very, very few positions and jobs, companies that I can think of that don't buy and sell something out of state. So interstate commerce, I put a little bigger definition down here. Notice that the Department of Labor has put a very broad meaning to this term of interstate commerce. So if anything that you deal with in your job has come from a different state, you're probably dealing with interstate commerce. And so one of the things they put in here in a very real sense, almost anything in connection with our modern economy is going to be sufficient to be interstate commerce. So number one is going to be met as long as you have 2 people working, they're probably going to meet this. Especially if you work alongside an interstate and you have customers, those customers are most likely, a lot of them are going to be coming from out of state. And if you had gross sales of at least $500,000. Now that sounds like a lot, but if you have a business of more than maybe like 5 people, you're probably going to hit this criteria. $500,000 in just revenue isn't all that much, especially when you have to start paying your employees. Now, if you only have a 1 or 2 person job business, then $500,000, you may or may not reach that, but any company of any moderate size is going to definitely hit this. So reaching the standards of being under FLSA isn't that tough for any decent sized company. All right, I'm not gonna, like I did in the first week, I didn't go through any of them. I'm not gonna hit everything. I want you to go through and reread these. I'm going to cover what I think are the very important items I definitely want you to know, and the items that may not be as easy to understand. Okay, so I'm down here to minimum wages, and you can see how minimum wages have back in 2007 where they were 8, and then 2009 all the way up till now 2019 when this video is being recorded. We're at 725. People think, is that fair? Well, the federal government obviously thinks it's not quite fair, or at least because of where they're located, mainly in DC, that their employers, if to get a federal contract through the government, if you're a company and you would like to get a contract through the federal government, you have to pay your employees at least $10.10 an hour. That's one of the criteria. So I have this little scenario to throw out there, and this is part of your discussion board for this week. Read through this, and so basically is if you hire somebody and the minimum wage suddenly goes from $7.25 to $10.10, should you then also bump up the pay of all of your other workers? Because what if somebody started working for you a year ago and they started at $7.25 and now they make $8.50? So now a year later they get bumped up to $10.10. They've been there a year, but also the brand new person that is just starting today also makes $10.10. Is that fair? Is that equitable to that person who has worked there for a year? Should both of them get $10.10? Or should you go to the other extreme, and since that's a 40% increase, I did the math for you, should you go ahead and just raise everybody's salary or their hourly rate by 40% to make it fair? So this person just coming in got an automatic 40% boost. Should everybody else get a 40% boost? Especially since they're your longer term employees, they're more valuable to you. Your employees who have been there a while are your most valuable assets. The new ones coming in, until they have learned the system, they're not nearly as valuable. So read through that and think through it. Give it a little bit of time and think through some of the different examples. What's going to happen and what would you do if you were the owner of this particular company? All right, just a few examples of some exceptions to the minimum wage rule. You can see here, if you are under 20 years old, they can pay you quite a bit less for those first 90 days that you're training. And that makes sense a little bit, but I don't know that very many companies do this at all. And then a few of the others. The biggest one here that a lot of you will have previously have experienced or are currently experiencing is the much, much lower rate that servers get paid, $2.13 an hour. Now, they are benefited through tips. And the one caveat is, yes, the employer can pay you as little as $2.13 an hour, but if you, with your tips, don't average $7.25 an hour, the actual minimum wage, then the employer has to substitute that and up their current pay. So just for an example, if you worked 2 hours and you didn't get any tips at all those 2 hours, it was a slow time, and maybe you had a couple customers and neither of them tipped, then the employer would then have to up your pay to $7.25 for both of those hours. You do have to at least get minimum wage, whether that's through the employer and the tips combined or if it's just the employer. There are a few categories, and it actually meets a lot of different job qualifications that do not have to be paid minimum wage. And as we'll talk about here in just a few minutes, do not have to be paid overtime. Now, they still are required to have the equal pay. So equal pay for equal jobs. But they do not have to be paid minimum wage or get overtime. The first one is an executive. Executives do not have to be paid minimum wage or overtime, mainly because they are salaried. And you're an executive if you meet these criteria. You manage at least 2 employees. You can hire and fire them. That constitutes an executive. You're administrative. You're paid a salary. That's going to hit lots and lots of people here. Professional employees, that would be somebody like myself who you have to have a college-type degree to be able to do the field that you're in. So I would be in one of these categories. And you are highly paid, at least $100,000, but the criteria is it cannot be manual work. It has to be regular, it has to be professional type, white collar type work. If you are manual work, then you are not considered exempt. You do continue to get overtime and the minimum wage rules, which probably wouldn't apply to you if you're making that much money. So those who are not exempt, who get paid regardless and get overtime, anybody who's in a blue collar, hands-on, manual type labor also always get overtime pay. So to kind of get around this, what employers have tried to do is make a position a salaried position. And if it's salaried, generally what that means is that person doesn't get overtime because employers don't want to pay overtime, at least time and a half. So they pay you a salary and call you a professional. But so the employee's gripe is we have to be there. We have to be ready 15 minutes before work, but we can't clock in. We work outside the office using our smartphones, email, kind of like what I'm doing now. I'm doing this from my home office, as you can tell behind me. So some temporary solutions. Some companies say absolutely no telecommuting. We do not authorize this, therefore we're not going to pay for it. They don't give their employees perhaps a smartphone. And the employers are not allowed to work over 8 hours a day. So even if you're in the middle of a client, you may have to get up and leave unless you're just a good employee and you're going to not be paid for that time after 8 hours. Something that I wanted to make clear that so many people just don't know, maybe mess it up, is when you say the word bi or semi, you can use this for lots of different things. You hear a biannual sell or a semi-annual sell or a bi-weekly something. So whenever somebody says bi or semi, think of it like this. Bi equals once every other. So bi-weekly would be, if I get paid bi-weekly, that means I get paid once every other week. And that's a very common. However, you would not hear, or it would be incorrect if somebody said they get paid semi-weekly. Semi-weekly would mean you get paid twice per week. And I leave the line there just to fill in whatever it is you're talking about. I don't know hardly any jobs that get paid semi-weekly. But when you're talking about some kind of like a big sale at the company, you would say maybe a semi-annual sale, twice per year. That makes sense. It doesn't make as much sense if you hear biannual sale. Well, that's a sale every other year. Not very many companies probably do that. So when you calculate hourly pay, we're going to take just a few minutes and make sure we understand how to do this. If somebody gets paid $690 a week and it's over a 40-hour week, and you want to know, well, how much is that per hour? That's real simple to do. All you got to do is just do the math, and I've done it here. So if you make $690 a week, simply divide that over 40 hours, because there's 40 hours that you worked in that week. Therefore, you're bringing home $17.25 per hour. That's how we're going to do almost any calculation. We want to break it down into what a week is, and then from there we can easily divide it by 40 hours in a week to determine what our hourly rate is. If you make $1,250 biweekly, so remember, bi means every other, so that means every other week you make $1,250. How much does that come out to be? Well, every other week there's 40 hours in one week, so we can double that up to 80 hours. So somebody making $1,250 bi-weekly actually makes $1,563 per hour. Now, the hardest one is if somebody says they make $1,250 semi-monthly. Semi-monthly, you may think, oh, that's every 2 weeks as well. But that's not quite true. When you work it out over a year, semi-monthly and bi-weekly are not the same. If you think bi-weekly, I get paid every other week over a year. If you do the math, that's 26 pays. If you do the math for semi-monthly, that you get paid twice per month, so there's 12 months times 2, that's 24. So you're getting paid 2 less paychecks in the semi-monthly than the bi-weekly. So therefore, your hourly rate will be different. It's going to be actually a little lower. So with a semi-monthly, what you have to do, you have to take quite a few more steps. You have to make this $1,250 semi-monthly and bring that up to what is the yearly amount. So let's do that first. $1,250 semi-monthly. If we say that there are 24 paychecks in a year, 2 every month, you do the math there, and that becomes $30,000. Now you begin to work backwards. 30,000 divided by 52 weeks in a year. That tells me how much I make per week. And then we're back up here to number 1. I can take the 576.92 and divide that over 40 hours. And you can see the difference. It is not the same. Even though they make the exact same amount, how they're paid This person makes more than the person who makes the same amount but is paid semi-monthly. Okay, overtime pay. If you meet the FLSA standards, you have to be paid. So that's the first criteria. You have to be FLSA standards, and you have to meet these right here, these items. As long as you don't fall into any one of these categories where you're exempt, then you are definitely allowed overtime. So you're allowed overtime at 1.5 times your hourly rate, as long as you've worked at least 40 hours that week. It doesn't matter for the general rules. If you work over 8 hours a day, you don't have to be paid overtime. It's once you hit over 40 hours for that week. And that week is a set 7 days. It isn't just Monday through Friday. It's Monday through Sunday, or whatever that company wants to use. They don't have to use Monday through Sunday, but they have to keep it the same. They could use Tuesday through Monday, whatever it is, just a consecutive 7 days. Notice here that employees can be required to work overtime. That is something that you may have not known. That's something that was new to me when I had first began to put all this together. It was interesting to read about that. And so they can be fired for not working overtime. There's no limit how much you can make your employees work as long as you pay them. And a few of the other little rules here, the FLSA is not requiring that you get paid overtime for any work on a Saturday, Sunday, or holiday. So if you haven't hit your 40 hours, just because you're working on a Saturday doesn't mean you get overtime. A lot of companies will pay overtime, especially professionals, if they need the help, but they don't have to. And as I said before, the general rule is anything over 8 hours in one day still isn't required to be paid overtime, not until 40 hours in a week is hit. So there's 2 ways to calculate overtime. Either way works. They come out to be the exact same amount. You just whenever you're doing any of the work here, or you want to figure up your own overtime, pick one that makes more sense to you and just usually stay with that. Don't try to go back and forth. So just looking at this, maybe doesn't make a whole lot of sense. So we're going to put a few numbers with it and see which one makes the most sense to you. If I work 44 hours this week and I'm normally paid $14 an hour, how much should I be paid? Well, option 1 says take your 40 hours times your normal pay. How much are you normally paid? You're paid $560. And then for any hours over, take that times 1.5 times your pay. So 4 times 21, if you take 14 times 1.5, you get 21. So 4 times 21 equals 84. You get $560 base pay, and then time and a half for those extra hours. Those 4 extra hours, you're getting your normal 14 plus half, another 7. So you get $644. The other way you could look at it is, instead of finding your normal base pay, go ahead and calculate all your hours at your normal pay. So that becomes $616 if you take all 44 at 14. And then for those 4 hours over, go ahead and multiply that by the extra half that's left. You've already calculated the first 4 hours at your normal pay. Now those last 4 hours at that half extra is an extra $28. So the $616 plus that 28 also gives you $644. So whatever one of these makes the more sense to you. Personally, to me, it's number 1, but for you, it may be number 2. But stick with that and continue to use that as you would ever calculate any overtime pay. If you are a server, your overtime pay is done slightly different Notice here you get your normal pay up through the first 40 hours, but then your overtime pay, they have to pay you at the halftime has to be at least $7.25 an hour. It's not half of what they pay you, the $2.13. So that's a benefit. Otherwise, half would only be like $1.10, $1.07 or so, whereas the employer has to pay you not at half of what they pay, but half of the actual minimum wage for any overtime you have. So I did this little example here just to help maybe clarify that. You get normally paid your $2.13 an hour for 42 hours, and you had an additional $350 in tips. So I want to know, how much were you paid for that week? So as let's scroll down through here. All right, $2.13 an hour at 40 hours. So the employer base pay, so I'm doing this as version 1 up above, $85.20, and then they have to pay you time and a half. So your overtime here is $3.63 plus your normal time. So your overtime is actually $5.76 an hour. Notice how I did that. This is your normal rate. So you definitely get that for your hours 1 and 2 that you're over 40. Plus you get half. Again, you get another bump as you are over the 40 hours. So you get your $2.13 plus the bonus for overtime. You get $5.76 an hour for those 2 hours, so $11.02. So your total pay for that week, well, you had your employer pay of $96 plus your tips, so $446.22. And then you could have calculated that out, $446.22, and divide that among, it was 42 hours. So you were getting paid $10.62 average. Notice this, I put this in stars here because every once in a while, and actually it's, you can see here in 2008, it was a whole bunch of times, people are not paid overtime when they should be. If you ever feel like this may be you, and I actually have in one of our homework assignments a scenario, and I want you to determine if the employee should be getting overtime. It was a real life scenario. Based on all of the things we've just talked about, should they be getting overtime? And you're going to do your arguments based on, does the company meet the FLSA standards? And are they not exempt from getting overtime? So as long as they've meet the criteria and you've provided some rationale on why you would think that, either way, then write up your case. And then if you ever feel you're in that, or you know somebody that is, you fill out this claim and you can send it in, and then somebody from the Indian Department of Labor will look into it and see if you are, and the rest of your employees are eligible for overtime. You're not getting it. Just one last example on overtime. Nurses typically work 12-hour days, and so if they work 4 days in a week, that's definitely going to be overtime, where some weeks they work 3 days a week. When you're a nurse, they have special rules for nurses for overtime pay. Instead of basing them on a 1-week standard, they're going to base them on a 2-week standard, 14-day period, just because of how they work 3 or 4 days a week sometimes. So if the company decides to use that, they don't have to. They can use the normal overtime standards, or they can choose to use the 14-day period. If they do choose to use the 14-day period, that's fine. So any hours that they're paid over 80 hours, that they work over 80, they get overtime. Or they also then, there's this exception, that if they work over 8 hours in any one day, they also would get paid overtime. And then the company, whatever one is greater, so if they work 88 hours, but they spread that out over 5 days, and every day they worked 10-hour days. So that's 2 hours of overtime for those 5 days. That's 10 hours. They'd get 10 hours instead of just the 8. So if a company decides to do that, they can do overtime based on a 14-day period, but the caveat is they then have to pay overtime over anything over 8 hours a day, in which most nurses work 12-hour days, 7 to 7. And you can go through the example that I have there to see how I work that out. Equal Pay Act. Most of you would have heard of this by now. Basically saying if you have the same job, you should be getting paid the same. You can't pay different based on somebody's their gender. There are differences that are allowed, and those differences are basically if you have worked there longer, you can be paid different for the same job. If you continually receive awards and good behavior, things like that, you can be paid more because of the merit system, and or quality, quantity of production, you can get paid more. But the bare bones there, you can't be paid, you can't both hire in at 2 different rates just because of a gender basis. The last thing that I wanted to cover here is what counts as work time, because just because your employer requires you to be there to change into their clothes, should you get paid for that? And the answer is yes. If you are changing clothes because the employer says you have to, by saying you're in the meat or poultry, then that is part of your principal activity of the job, and you are to be paid for that. If it's simply putting on a normal outfit at home, like a dress suit, or a dress or whatever it is, then no, that's just part of just getting ready in the morning. But if you actually have to go into work and put on special clothes, that is time that you are to be paid. Idle time, yep, you're going to be paid for idle time as long as you are there for the benefit of the employer. So if something breaks down and you have to wait for it to get fixed, you will still get paid for that. Rest periods, you do not have to be paid for rest periods by federal mandate. Some states trump that and say that you can. So whatever gives the better breakdown is the item you have to look at. Working at home, yep, you have to be paid for work at home as long as you are a non-exempt employee. So if you're required to work from home, you will be paid. All right, things not covered. A commute, most people know that. You getting to and from work, that's not going to be paid. And then finally, our last bit here, and most of you would have probably had this, where you have to get a work permit as a high school student. Basically, your basic age to work is 16. For FLSA, there are a few exceptions. You can be 14 or 15-year-old and work in some of the basic retail, fast food and gas stations. Note here, if you're 14 or 15, all work must be done outside school hours, and you can only work 3 days for a max of 18 hours. You have to be done working by 7 o'clock or 9 o'clock when it's summertime if you are 14 or 15. Any jobs that are deemed dangerous, you cannot work those until you are at least 18. And then, of course, all minors have to have a work permit showing how old they are. And you generally will need one of the following: passport, birth certificate to get that. All right, that is our first part of this this week's lesson. The next part, we're going to do a little bit more calculations when we look at FICA taxes, the caps, and how much are you going to be taxed for Social Security and Medicare if you hit any one of those caps. So at this, we will stop this recording, and you can move on to number